There are two ways by which an individual can achieve their financial goals. The first is by saving their money and the other is by investing their money. So under investments, you have several different investment options. Some of the more familiar ones are investing in gold, in real estate, and also foreign currency. The stock market is another option for investors to look at to add to their portfolio of investments. One thing that needs to be noted is that stock market does have the two aspects. They have the returns and also the risks, but it should be noted that as long as an individual has a good understanding of the stock market and makes well-informed decisions, they are able to reduce their risks of investing in the market. Another difference from the stock market to some of the other investment options is that investing in the stock market is much more organized and also is governed by a legal framework. Coming back to the question of what is a stock market is a place where you can buy and sell shares and debentures, collectively known as securities, of publicly listed companies. A publicly listed company is a company whose shares have been listed on the stock exchange through an initial public offering. The Colombo Stock Exchange operates as the only share market in the economy, and it is responsible for providing a transparent and regulated environment for both the institutional and individual investors operating in the capital market. So in order to trade on the Colombo Stock Exchange, it is a must for an individual to have a CDS account. For this, there are a few requirements that need to be met. The first one is the individual needs to be at least at a minimum of 18 years or above. They need to possess a national identity card. They need to have billing proof of address. And then they must also have a bank account and also an email address. There are two ways in which someone can open a CDS account. The first one is by visiting a registered participant of CDS. We have 28 licensed stockbrokers who can help you with opening a CDS account. The list of these 28 stockbrokers are available on the Colombo Stock Exchange website. And the other option, which is the more convenient option, is to open a CDS account through the newly launched CSE mobile app. So there are 28 licensed stockbrokers in Sri Lanka. In general, the service they provide are quite similar in nature. It is possible for you to find out the names of the 28 stockbrokers in the Colombo Stock Exchange website. As you know, in a dynamic market that we are right now, reliable information is very important. Therefore, it comes down to the preference of the investor when it comes to choosing a stockbroker who's had a very strong track record of making the right calls in stocks. So there are two ways in which someone can buy a stock. The first is through a primary market. So the primary market is where someone can buy shares through what we call an initial public offering. This is when a company lists itself on the stock exchange and they will issue a notice to the general public inviting them to buy shares in the initial public offering. So any investor at this point can fill in the relevant documents required and can buy the shares of these companies at an IPO. In the secondary market, the shares that are already owned by the investors following an initial public offering can be bought and sold through a brokering firm. It is important for an individual not to just invest all of their money in one stock. In other words, do not put all of your eggs in one basket. By investing in different companies, an individual can spread their risks. So when building an investment portfolio, it is important to think about a few different factors. The first one is how much you are willing to invest. The second one is over what time frame you are looking to invest, and the third one is what is your expected return. So based on these, an individual can pick the stocks for their portfolio. The other way of spreading their risks is by looking at different sectors. So here again, you do not want to be exposed to one specific sector. By looking at economic, political, and also other developments that are taking place in and around the country, it is important for you to choose your sectors. For example, in the current pandemic, you are seeing certain sectors that are benefiting quite strongly, while there are also other sectors that are being impacted. So in this context, it's important for an investor to make sure that they are exposed to the right sectors at the right time. Another option an individual investor has is to invest into diversified companies. So these are companies that already have positions in different sectors. By doing this, again, an individual investor can spread their risks. By making informed decisions in the stock market, an investor can make strong returns greater than most of the other investment options. There are few types of returns that an investor can benefit from in the stock market. The two main ones are, the first one is capital gains. So here, for example, if you bought a share at 10 rupees and you saw the price appreciate to 12, at which point you sell, you are making a 20% return on your investment. The other type of return that you get is when you buy a particular share of a company, you are entitled to the profits of that company through dividends. So dividend returns are also something that you can expect to gain from companies when they have a strong performance. Right now, given the context of a low interest rate environment, investing in the stock market will give an individual investor much higher returns than most of the other investment options around. We usually use a price index to measure the sentiment of the market. We have two indices in Sri Lanka, namely the All Share Price Index, also known as the ASPI, and the S&P SL20 Index. The movement of both of these indices depend on collectively the performance of the companies that are listed under these indices. So when collectively the stocks are doing well, the indices will move up, and when they come down, you will see the indices move down. So this will give the investors a sense of direction as to where the market is heading. We generally recommend investors to get into the market when the stocks are coming down, but it is important for investors to understand the reasons behind the stock prices coming down. If there are no fundamental reasons that are affecting the company's stock value, when the market comes down, it provides a good opportunity for investors to buy in. It is important for investors to understand that investing in the stock market has an element of risk. Market fluctuations are a common theme that you will see. This depends on certain news items that can come on specific companies, on the economy, on the political front. So in this context, it is important for investors to make an informed decision, seeking the advice of their investment advisors to place themselves in stocks that are fundamentally strong and will generate returns in the long term.